Good morning, everybody. This is Huling from UNIFI. Thank you very much for joining this webinar. So to get started, this webinar will be focusing on the guidance document. So you will all be aware that we launched the principles just over a month ago in New York. During the launch of the principles, we also launched the guidance document. So at the moment, we have around 140 signatories to the principles. We now have 3/4 of the banking membership that has now become signatories to these principles. Now we're obviously turning our focus on to implementation, which is really what the guidance document is there for, to support implementation of the principles. I am joined by colleagues James Vaccaro from Triodos Bank, Siobhan Toohill from Westpac, and hopefully Daria from Garanti and Omobolanle from Axis Bank will be able to join us as well to help with presenting the guidance document. So just for a bit of background, during the consultation period, we had launched what we called at the time the knowledge and guidance document, and this is really a revised version of that. We have made quite a lot of amendments to the document based on feedback that we received during the consultation period, and so we will be basically running through what the structure of the document is, and also going through an example of implementation that we have developed. It is illustrative in nature. There is no bank that has gone through the process of implementing the principles. We're at the beginning, so please do bear that in mind as we go through this. The reason we developed this example, which includes an example of target setting, is that we received a lot of feedback from banks saying, okay, we love that the principles are not prescriptive, but we need some guidance around how we can go about implementing them. And so I hope that this is very informative, and we look forward to your questions, which you can put in the questions box, or you can raise your hand and ask us a question. I would prefer that you do raise your hand and ask us a question so that we fully understand what your question is. But with that, let us get started. So I'm going to hand over to James, who will be going through the principles recap and the introduction to the guidance document. So over to you, James, and let me move the slides.
Perfect. Thank you, Peleng. Morning and welcome all. I'm going to, as Peleng said, just kind of kick off with a recap on the principles themselves. So, Peleng, are you controlling the slides? If you put it to the next slide. So the if you haven't fully been aware of the principles for responsible banking, then where have you been? It's been everywhere. But don't worry, because this is a living thing, so we're very happy to kind of go back over again. And maybe just to kind of kick off before diving into the individual principles, just give a recap to the whole philosophy, I guess, behind the development of the principles. This was designed as a mechanism to drive continuous progress within banking, and it very specifically was designed to create a mechanism for any bank to be able to join, no matter how mature or relatively new they were to the sustainability journey, but to be able to ensure that there was really accelerated progress. So there's a lot to implement and review, and as a consequence of continuously setting targets and then reporting on those transparently, look at where the organization comes to, and then being able to kind of refresh that over time. So it's very much a sort of a learning and developing tool rather than a benchmark which you tick off once and then put away in a cupboard. So this is the start of a journey. and I'll take you through these 6 principles just very, very briefly. So principle 1 is around alignment, and that really sets the overall level of ambition. So that's the light on the hill, saying we collectively are signing up to aligning our business strategies within our banks to the things that society feels is most important. And we identified and specifically called out the Paris Climate Agreement and Sustainable Development Goals as being key global examples of what it is we need to do, but then talked about relevant national and regional frameworks, because in different countries, in different contexts, there will be other things which have got similar relevance, but just in a different maybe more regional, localized context. So that's really being able to sort of say that's what we're aiming at, and that's the guide. But how we get there is really unpacked in the following 5 principles. Principle 2, impact and target setting. It's about being able to continuously increase the positive impacts and whilst reducing negative impacts. And in order to be able to start that, you need to know where it is you are right now. So what are the impacts from the bank's activities, from the bank's balance sheet, from all of the things that we do collectively on the world, on the environment, on society? And that's both an internal process of discovery, and it's and sort of deepening our understanding, and it's a process of discussion with our stakeholders to get multiple perspectives on where are the areas where we currently have the greatest impact, and where are the areas which we could make the most difference going forward. And once we have those, and we've identified those areas where we can make the most difference and the most significant areas, being able to set and publish publicly targets on those key factors, to be able to stretch us to publicly declare our ambition. Then moving to principle 3, and maybe sort of 3 and 4, it's about being able to put in place strategies with our clients and customers, with our stakeholders, to be able to engage our clients. What is it that we can be doing through our relationships to be able to not just move things forward in terms of our own targets, but be able to kind of create the conditions for greater progress towards that principle 1 of alignment over time. And then with stakeholders, where things go beyond just what we can do with clients and customers, how are we engaging with others from the policy sphere, from the enabling environment sphere, from all of the other folk who are concerned or affected by our activities? How do we make sure that they're fully engaged at all times in an appropriate way? Then on to principle 5, the governance and culture, and that's about being able to embed the implementation of our principles through effective governance, so that we've got strong oversight for how this is managed. And a large part of that is connected to principle 6, which is about transparency and accountability. So once we've set those targets, we're doing it in public, and we are coming back in our public reporting and reporting transparently on how we've progressed, being able to kind of show sort of, the gaps which still exist, and to be able to celebrate the successes we've had, and to be accountable for what we've set out to do, and being able to kind of have some degrees of scrutiny and sort of auditing of what we've set out, to make sure that there's full confidence given that this is being taken fully seriously and integrated into the bank's normal processes. So that then leads back to, well, then how are we doing at that phase where we've made progress on those targets, and then we can kind of go around in the cycle and say, well, where are we now? What else do we need to do to align to these global goals? What are our largest impacts? What are the next wave of targets we might set? And that cycle then continues in a positive direction over time. So that's how the principles work, and I think it's very important to see them as a cycle and a set of connected principles rather than 6 discrete actions which need to be ticked off. But that said, there are actions which need to be done. And so if you pop to the next slide, Peleng, then we'll take you through then the list of things which you then have to do. And this webinar is designed, all of the supporting materials we'll take you through today are designed to be able to help hold your hand through this process. It's not prescriptive. This is not something which this is not a compliance document, but this is something whereby, in order to stay true to what we've designed, this is some useful guidance to be able to understand and help integrate it and implement into your own bank's processes. So again, just kind of unpacking these bullet points. Firstly, assessing the frameworks that are relevant in your operating environment. So what are the things that beyond Paris Climate Agreement and SDGs, which I think all banks are pretty much aware of and working on in one way or the other, what else would be relevant to you? Are there some national frameworks? Are there some things specifically connected to a sector, sets of principles which need to or already are enshrined or in the cusp of being enshrined? Are there certain collective agreements or targets which are being set which you feel are relevant in terms of captured within the spirit of that alignment, so that is added into the sort of the underlying basis of principle 1. Then moving to the second bullet, conducting an impact analysis. So people have done impact analysis to some degree or another, but it's about being able to deepen the understanding of really where does the bank have or could have the most significant impact on goals which are relevant to society. So if you take things like climate, it's being able to take it beyond, for example, the scope of just the bank's operations, which is quite a relatively minor part of what a bank's climate impact is, compared to, for example, the much more significant impact on of a balance sheet in terms of all of the clients' emissions. So being able to kind of get a clear picture of that is something which is probably first established internally, but then needs to be confirmed and enriched by engaging meaningfully with stakeholders in a process before going on to the next bullet point, which is setting and publishing targets in those areas where you think you can make the biggest difference, in the area that the bank could have the greatest impact. And we've said we don't need to sort of set a target on absolutely everything. We've stipulated to start with at least a couple, but the idea is that as the bank's strategy evolves and as we are turning towards more things and sort of can widen the net of relevance, that there are targets, a set of targets which are meaningful, are clearly demonstrated to be the ones which are most significant in terms of the SDGs or climate or other sustainability factors, and then are reported on. So engaging your clients, customers, and other stakeholders to work towards those outcomes is often because in order to craft any strategy where we're talking about impacts, it's almost impossible to kind of imagine how that could be done in isolation. It will always be done through the relationships which we have with our clients and customers, with stakeholders, in the different constellations, and as a sort of systemic approach. Embedding the principles into the governance structures means that there is effective oversight, that this is something which is whatever your structures are, and it's not at all prescribing what it is that they need to be, but that it falls into something which is clearly seen, that is clearly visible, it's taken seriously, and has got good oversight at the highest level. Also being able to do things from the top down, and we had I think an unprecedented number of CEOs in New York last month, So it's very clear that CEOs are engaged in this. That gives huge amounts of permission and license to everyone driving through this within the organization. And it's really an opportunity to engage all employees to be able to drive culture within the bank. So to be able to galvanize some of these initiatives as being really sort of central to strategy and what each bank is doing, both individually and collectively. And then reporting on progress. So there is a bit of a grace period, because there's an acknowledgement that there's an awful lot to set up here, and people are at different stages of the journey. So don't read this within 18 months of signing as being you don't need to do anything within 18 months. We would love it for there to be consequential action taken as soon as possible. But what we're really sort of saying is that we really want there to be some reporting on progress within 18 months of signing, and then year on year within, in particular, public reporting. And we'll talk a little bit in a second about the reporting and self-assessment template. Pulling, if you go to the next slide, please. So in your packs, we have what effectively is a manual. So imagine you've got a brand new zero emission electric car, fresh off the forecourt. This is the manual. You don't need to be reading it while you drive, but it's probably really quite helpful if you do read it now, because it's going to help your experience when you are on the road. So it's been structured in such a way as to kind of be in meaningful bite-sized chunks. What we have within the principles is the principles signature document, which people who have signed, or of those who are about to, that's the formal agreement to commit yourselves to the principles. That is standardized and is the same one for everyone. The key steps to be implemented by signatories that you can use as your checklist or sort of action plan, and that's really there to set out your kind of steps along the path, the journey towards full implementation. And although, as you may have heard before, there's this various kind of ramping up period, and maybe up to 4 years to be fully implemented. Really, the core advice is to get stuck in now and to start as you mean to go in, to get some of the architecture of this set up. It can take time, which means all the more reason for really getting started with those actions. The reporting and self-assessment template, that is standardized. It'll be customized, obviously dependent on your own specific targets, but it's a means of being able to help everyone within the community, the signatory community, UNIP FI, and others, to make sense of, to sort of be the handy guide and the signposting for where are all the interesting bits which you've put in your public reporting, so that we can keep tabs on how all banks are progressing. That's going to be really helpful to underpin peer learning networks, so we can learn from one another, see where there's best practice, see where there's maybe more support required, and to be able to get some degree of comparability and consistency amongst the signatory community. And then the main course for today in terms of supporting documents is the guidance document. And that really is, it's a helpful guide. So this is not a prescription tool. This is not you must follow this. This has been designed to encapsulate all of the kind of the useful hints, all of the conversations that the core group have had over the last couple of years, all of the best practices, all of the things which we've kind of said, look, if you're not aware of this or how these different elements interrelate, that's what's in here. It's got worked examples. It's there for inspiration and guidance. It is not a compliance document, but it will help, and it will help probably in the circulation of this document internally. We very much hope galvanize that understanding so people are clear what to do next. So if we move to the next slide in terms of the guidance document, and I'll be handing over to Siobhan in a minute to go through in a little bit more detail. But as we've said, it's non-binding practical guidance. It's been put together with by the core group. So Huey, Niru, Dimitrios, and Wendy led on this project, but there's been input from all of the banks spanning all of the different continents and business models. So it's really been a collective effort offered up as your helpful guide. And if you go to the next slide, the structure, what we've tried to do to make it as digestible as possible, is to be able to have a consistency in how we put together the guidance document so that we're unpacking each principle. So it follows a fairly standard format where we take the principle, again, we restate it, give a little bit of an introductory paragraph, just being able to give some background and context to what does that really mean, and what is really required from you as a signatory. Then we've got some suggestions as to, well, what are measures that banks can take to implement each of those? So we might be mentioning there what others have done. We'll be including key resources that banks have used and can use. What we were very careful to do in designing these principles was, rather than setting out our own rule book of this is how things should be done, we've been incorporating by reference lots of the architecture of other sets of guidance frameworks, principles, all those other things which already exist by reference, so that we're able to sort of, in this document and through the principles, have more of a master document which integrates everything. This becomes then a sort of a master plan of the sustainability transition for banks, hence the number of references to other resources and frameworks. Then we've given some examples, practical examples, which are offered for inspiration, concrete ideas, jumping off points, things which you can discuss internally, and that gives this kind of more, we're bringing the illustrated examples, we're bringing the principles to life so that they can help you in your discussions and getting things initiated as a project. That's the introduction. I'm now going to hand on to Siobhan, who's going to take you through more detail on the guidance document itself.
Thanks, James. So hi, everyone. I'm going to give you, I'll step you through an example of how you might look to implement the principle. So I'm going to give you a worked example, and it's very much around how you might go from the very start to working through a couple of years of what implementing the principles might look like. And this is very much a sample of guidance of how a bank might implement each of the principles over those first couple of years. So let's go. So as I said, this is not a binding or based on the experience of a real bank. It's just very much an illustrative experience, but it's really designed to give you a structured guidance of each of the activities or the activities that a signatory might undertake to implement each of the principles across each of the years. So as we move into year one, just waiting for the slide. So as we move into year one, it's very much around understanding where the bank stands and making that very initial plan. So it's actually it's about very much just pausing and understanding and stepping through each of the principles to understand more deeply what you can do and to build that initial plan. So onto principle one, it's very much around identifying the goals. This is working through the goals that are in relevant frameworks for your bank. So it is, of course, the Paris Agreement, it is the Sustainable Development Goals, but in particular working through those goals that are a priority for you and those goals that present, I guess, potentially significant challenges for your bank. but also reflecting on what are the national frameworks that might be relevant to your bank as well. So really just understanding what's relevant to your organisation, what's relevant to your bank, and to think through strategically how you might contribute to those priority goals and challenges. So then stepping into principle 2, which you might recall is around impact and target setting. So this is around starting to undertake an analysis of impact of your portfolio to determine what are the most significant impacts. So really it's about just stepping through and understanding where your bank has those most significant impacts, and it's both the positive and the negative impacts. So in this example, it is this bank, this mythical bank, has realised that it's got a substantial exposure to the energy and transport sectors. And it's also in a country that's got really ambitious national climate goals. And it's also recognised that gender inequality is a very significant challenge, and the government has identified that as a priority as well. So then again, another example of a national priority. Of course, it reflects a goal that within the Sustainable Development Goals as well. So this mythical bank is identifying climate and gender as its two areas of most significant impact, given how they relate to the SDGs, but also within that nation as well. On to principle 3, which is about clients and customers. So this bank is looking at how its clients are engaged in sectors and activities associated with significant impacts, and how it could transition to more sustainable and resilient business models. So this is around what role this bank can play in helping its clients transition around energy, but also, or climate change in particular, as well as around making progress on gender and gender equality. Then on to principle 4, the bank then undertakes a stakeholder mapping exercise. So this is about understanding who are those external stakeholders that are most relevant to the bank, and in particular to these two goals, and works through a stakeholder engagement strategy and working through those stakeholders, how it's going to engage those particular stakeholders on what issues and how and when it's going to do that. So really working through, if you like, a stakeholder engagement or communication plan. Then on to principle 5. And here the bank is reflecting on its governance structure. Is the governance structure adequate to support the implementation of the principles? And it works through what are the reporting lines, who's accountable for implementing these actions around climate and gender, and who is going to oversee that. So in this case, it decides to establish a dedicated committee, and it's going to be responsible for overseeing the implementation of the principles, and then periodically reporting up to the board on progress, and in particular around these two key dimensions. And then it maps and it considers the existing international and regional good practices. What does good practice look like in these two areas, and how are they relevant to how this bank might implement the principles, and therefore what are its priorities around how it's going to align with what that good practice looks like. So really just stepping through what does good practice look like within that particular region. It might also be looking to peers as well to determine what that might look like. And then on to priority 6, which is around transparency and accountability. So within 18 months of becoming a signatory, the bank communicates its progress, and that's very much a requirement of supporting the principles. And it works through the sections of the reporting and self-assessment template of what it can do at this stage, and publishes this as well. And so the bank here is in a position to do its self-assessment, and it's going to use its existing assurance processes, and it obtains a limited assurance of its self-assessment. So for example, it might be a bank that's already doing some sustainability reporting, is able to leverage that assurance process that it already uses. It works through the accuracy of the information that the bank relied on in completing its self-assessment to do that as well. And then at the end of this process, the bank's decided that actually it's feeling a little more ambitious. It's ready to step into year 2, and it checks in, engages with the Unit 5 Secretariat team for some guidance and support, insights around how it can build on those achievements, or if you like, that first year of understanding as it steps into its second year. So we can think of year 2 and year 3 as really developing the foundation. So you've had that first year of understanding, stepping through the principles and building that plan. Year 2 and 3 is now building that foundation. So it's going to really very much determine that gender equality, climate and pollution are strategic focus areas, and it's identified some strategic business opportunities that will enable the bank to really take action on these areas. And so moving into principle 2, based on the outcome of the impact analysis, it's working through how it can really take action on positive and negative impacts. It actually starts to develop strategies for improving the measures that it has as well. So importantly, it starts by setting a SMART target, and that it's a SMART target that's going to address 2 of the most significant impacts, and it works through the milestones around how it's going to achieve that target and the measures to monitor progress against those targets as well. And that's that process, if you like, is set out later in this deck as well. And it also makes sure that its decision-making committees and bodies are aware of the risks and impacts associated with the bank's activities. So, what are the downside, the negative areas, and that needs to be monitored around how that bank is going to address those areas and how that's going to be incorporated into their processes as well. And then on to the principle 3 around clients and customers. It identifies which clients it's going to work with to achieve its targets and begins to engage with them. And it works through and it develops questions about its clients and customers' sustainability preferences, their impacts, and their environmental and social risks. And what it's done is actually they've decided to think through what are the onboarding processes, how can it build in some key questions or areas of identification as it onboards a new customer around these particular areas of focus, around gender, climate and pollution. And also starting to determine where there might be opportunities to make progress in how they might partner or progress with those clients and customers. Then on to principle 4, thinking about stakeholders. The bank is now starting to really engage with stakeholders in line with this news, with its stakeholder engagement strategy. And through working with those stakeholders, the bank is getting a much stronger understanding of how much more it can do to really contribute to the needs of society through its business and around these 3 particular dimensions, and really working through how it can better partner with stakeholders to really accelerate those impacts. So really understanding where there's opportunity, partnership with those stakeholders, and getting insights around where it can best focus. And we all know from engaging with stakeholders, those conversations, while at times can be challenging, often they do give you real insight where you can make the biggest difference or drive that impact faster or greater. Then on to principle 5 and governance and culture. And here the bank is making some further changes to its governance structures and processes. So it's assessed the governance structures, determine where it needs to make some changes and to strengthen, to really drive and facilitate the implementation of the principles. So it starts by integrating sustainability objectives into some decision-making processes across the bank. They've included sustainability criteria into the terms of reference of the board's nomination policy. So that is thinking about who might be moving onto the board and identifying that there are some criteria around new board directors that have got some some element of experience around these sustainability criteria. So perhaps it might be around gender focus, for example. And also ensuring that its existing credit policies, its customer engagement policies and procurement policies are also consistent with the strategy. So starting to build in those factors that will enable the bank to really drive change around these areas of focus around climate, gender and pollution. And then it engages with some internal stakeholders to determine what a SMART target could look like for the business and what would need to be done and how that it can be achieved. And then moving into a strategy for building that culture of sustainability in the organisation. So really how to connect and engage with the employees, and then working and aligning with good practices that is elected to prioritise. So looking at some of those additional frameworks that are going to help the organisation make progress as well around, for example, it could be a human rights screening process, or perhaps being a signatory to the Equator Principles. So building in, if you like, that environmental and social risk assessment into project finance, for example, through the Equator Principles, and giving it that focus in particular around climate, as we know with the Equator Principles version 4 coming through. And then on to principle 6, each year the bank is reporting on the progress that it's making. And it's starting to report on the targets as well as the KPIs that it set itself as well. And again, works through the reporting and self-assessment template, providing as much information as possible, and really building on what's happened in the previous year. And again, it obtains limited assurance of its self-assessment. It checks through the accuracy of the information. And again, the bank is seeking feedback and guidance from Unit FI on its targets and some insights around how any gaps relating to the targets could be addressed, and any other elements of implementation as well. And then moving on to year 4, and this is very much around building on that foundation. So this is around building on the analysis in year 1, and then the targets that it's set in years 2 and 3, and that building on that foundation. This is the point after those first 3 years that the bank decides to revise its overall strategy to align with society's goals. So having gone from looking at 3 dimensions and starting to build that into the bank, now it's setting an overarching strategy and really driving integration of sustainability into the bank's overarching strategy, and making sure that the business strategy doesn't run counter to the achievement of society's goals here as well. Around Principle 2, impact and target setting, it's very much monitoring the progress that the bank is making and implementing its targets, making sure it's on track with the KPIs, but very much around KPIs that are much broader and much more integrated in terms of how the bank operates. And it's got 2 years remaining to achieve one of its initial targets, and it's reevaluating those impacts. And they're working through the next area of most significant impact, and it's also developing a next target or an additional target as well. Onto Principle 3, clients and customers. Based on the information that they're getting from onboarding clients, they've realised that they can better structure some existing products and better manage its risks. And they're looking at more sustainable practices and business models. For example, it could be sustainable finance initiatives around working with some clients around progressing these 3 target areas. And then on to Principle 4, around stakeholders. It implements a strategy to work in partnership with stakeholders. So not just engaging with stakeholders, but truly working in partnership with stakeholders, really benefiting from their expertise and really looking to accelerate impact as well. So, I guess taking that engagement to the next step and a more connected partnership. And then working through with policymakers and regulators to actually advocate for policies. So actually taking that step beyond around how much national policies be changed to create a more enabling environment for the implementation of the principles and contributing to sustainable development in a more general sense as well. Then on to Principle 5. And here, the bank is, from a governance and culture perspective, it's building on its analysis that it did way back in year 1, it's reviewing its employee incentive structures. So reflecting on how it's building a culture and how it can really accelerate that through how the policies are set for employees and rewarded as well, and how they facilitate fair treatment of customers and clients. And so there are very much incentives designed to drive that implementation of the principles, and they've got KPIs now in the employee contracts as well. Now the bank has got a human rights screening process in place, and they've got the Equator principles in place as well. So now they're starting to map some additional international and regional practices as well, and determining which practices it tends to start working towards around integrating existing practices in the following year. So starting to work through are there additional frameworks and what are better practices and governance mechanisms that the bank might need in that next year as well. Onto Principle 6, which is around transparency and accountability. Again, the bank reflects on the progress it's made over that year as well. It reports on disclosures around significant impacts again, and its risks, the targets it's set, and its KPIs, and also reflects on the governance measures as well. So there's a deepening, if you like, of the ability to report on the progress made. It also reports on the good practices that it's adopted, and it's now able to really fully complete that reporting and self-assessment template. So back to reflecting on year 1, there were some elements of that reporting template it could fill out. By year 4, it's now able to fully complete that template and really able to demonstrate that it's in line with the commitments under the principles. There's lots of evidence to demonstrate this, and it's been assured by a registered assurance provider. So again, if they're working through sustainability reporting, it might be an entity, it might be one of the big 4 assurance providers, or another assurance provider that's a registered assurance provider that the bank works with. Perhaps it's involved in auditing other aspects of the organisation, and they include that assurance statement in its report as well. And finally, of course, the bank also then seeks feedback from Unit 5 on its measures, what more it can do in the next year to maintain ongoing improvement, but also how it can provide leadership and in working with others, provide that leadership towards how it might implement the principles throughout the banking sector as well. And hopefully engaging with many other banks involved in the principles for responsible banking, that co-development, co-leadership, engaging and sharing with others, which we all know is a really important aspect of being a participant in the principles. I might hand over to back to Pooling, and hopefully we've got Daria on the line.
Thank you very much, Siobhan, for talking through that example. I hope that has enriched everybody's understanding of how they can go about implementing the principles. And of course, we've set this example out over the first 4 years of implementation. And once a bank gets to the end of 4 years, or once this fictitious bank gets to the end of year 4, it's not over. It's now about improving and continuing to, have a look at to analyze its impacts, more significant impacts. To set targets as one target is almost reached, so that it has 2 targets at any one time, to continue to look for what good practices are, and to incorporate those into its existing practices, and so on and so forth. So this is really just setting out the beginning of implementation and how a bank works through each principle to implement. So please do go ahead and ask us questions in the question box if you already have them. So what we are going to move on to now is the presentation of the examples of target setting. So you'll note that Siobhan, in presenting what a bank does in year 2 and 3, made mention that the bank sets targets. And so what we are now going to present is what these targets could look like. And so I will be handing over to Daria Ozet-Yelgi from Garanti and Omobolanle Victor Lanyan from Access Bank to present on these targets. So Daria will go first, and then Omobolanle will present on the second. Let's hope that they both have good sound. Daria, over to you.
Thank you, Pooling. Can you hear me well?
Loud and clear.
Okay, perfect. Good morning to everyone. In this first example, and if you can open, Pooling, slide 18 for me.
Oh, we have it open.
Yeah. Okay, so in the first example, I will explain how we could set a target on climate change based on the criteria defined in the guidance document. First of all, it goes without saying that the target should be associated to our downstream operations, which means our loan portfolio in our case, because the highest potential negative and positive impacts occur in our loan portfolio across our value chain. So our starting point would be the Paris Agreement and aligning with the well below 2 degrees, striving for 1.5 degree scenario. And in order to set a target, we would need to first identify where to focus on in our loan portfolio. So under the portfolio impact working group, an impact assessment tool is created, and this can be a way to make this analysis on the portfolio level. But as in previous slides, you mentioned, it is not a must. There are other ways to identify the portfolio level impact, but this will at least show many banks a way to how to do it. So in order to find out where to focus on, we need to first look at the breakdown of the exposure and maybe the revenues in each sector in our portfolio, and what are the sectors in, let's say, each type of operation, such as retail banking or SME banking, corporate banking, and investment banking. So later on, we need to understand what kind of potential negative and positive impacts are associated with each sector. In the tool that I mentioned, there is a sector to impact map to give the banks an understanding of what are the potential positive and negative impacts under each sector and also subsectors. Then after understanding these potential negative and positive impacts, we need to think about some other factors which will vary from one methodology to another, such as what is my country's pressing needs or priorities. For instance, is it a geography where we are expecting a water scarcity in the, let's say, coming 5 years? And if yes, the factors that have an impact on water quality become even more important for us. So after doing this analysis, I may come up with, let's say, 3 different sectors that are important in terms of their potential negative and positive impacts. These are assumed to be energy, transport, and agriculture in this example. So all of these factors are important both in terms of the climate change, the theme that I am setting a target on, and also our country, our bank's operations in terms of exposure and the revenues. Within these sectors, we need to understand what technologies are used. For instance, are the majority associated with, let's say, natural gas power plants with lower efficiencies, or are they mostly wind power plants with minimal impact on the environment and society? So it is also important to understand the type of clients that I have exposure to in those subsectors. To give you an example, if the largest, let's say, coal power plant operator of the country is one of my key clients, and they are, let's say, among the top 100 companies in our country, then they are kind of a benchmark setter in their own sectors within the country, and their investment behavior would be more influential in the market compared to other small players in the market. So these are all, kind of factors that we should take into consideration when doing this prioritization analysis in our loan portfolio. With all these factors, I can come up with a starting point where I know exactly where to start decreasing my negative impacts and increasing my positive impacts, and then identifying how to align them with the Paris Agreement. I need to focus on the scenarios available in different resources. This alignment would require the bank to work both on my portfolio mix and also to work on transaction level, and maybe engaging with our clients, other stakeholders, in order to encourage, for instance, in case of clients, encourage them to invest on cleaner technologies through some incentive mechanisms such as the green loans. All these adjustments may require the bank to develop some new sectoral policies, for instance, maybe divestment policies, design some engagement strategies with all stakeholders, beginning from clients to, let's say, policymakers, and to develop new financing mechanisms to drive an increase in the positive impact side of my portfolio. Finally, with this roadmap, I am able to say we will align our lending, or in case of an investment bank, investment strategy in the case investment strategy with a well below 2-degree goal, striving for 1.5 degrees within, let's say, 5 years or 7 years. So we can go to the next slide, playing. As I explained in the previous slide, the roadmap to reach this target will require a variety of action plans. It may require a development of maybe a range of new sustainable solutions that I haven't considered before. This can be, for instance, focusing on green mortgages or electric cars rather than conventional mortgages or diesel cars. Then we may seek to get some low-cost funding from international financial institutions to create an interest rate discount for these specific products. If there are any barriers in the regulatory framework which prevents the bank to expand their portfolio in these sectors, then we may engage with policymakers to eliminate such barriers. And for instance, if there is no methodology to identify what is green and what is not in the country, then we can work with other stakeholders to create a new one. And this is exactly, for instance, what we have been doing in PRV in a variety of different working groups. So after determining all these steps and the ultimate goal, the next step would be to identify the relevant KPIs to monitor the progress against the target. These KPIs will reflect how we perform on each type of action that we determined in order to reach our target. We may also set some sub-targets that will help us to reach the ultimate goal that we set. So, for instance, these sub-targets or the KPIs might be the exposure to carbon-intensive technologies by what percent, and this can also be read as a target, so reducing our exposure to carbon-intensive technologies by 60% within X years, increasing funding and investment in renewable energy by X% on an annual basis, introduction of conditions in loan agreements requiring methods of agriculture that result in reduced greenhouse gas emissions by year X, partnering with government transport agencies to support public transport infrastructure by year X. So after setting all these plans and KPIs, the final step would be to revisit the results that you are aiming to achieve and think about if you are creating a negative impact. So what I mean is, if you, for instance, plan to change your portfolio mix and maybe divest from, let's say, fossil fuels in a short period of time, and if your peers follow what you are doing, then of course this will have an impact on this specific sector. And because it will take time for these clients and their labor force to develop a new strategy and skill sets in order to make a transition towards cleaner technologies, we may require some actions in order to mitigate this, let's say, negative impact. They might be to launch a capacity building program for these clients or work with policymakers, let's say, to have a series of incentive mechanisms that will enable those clients to make a smoother transition. So I will stop here and hand over to Access Bank to present the other target setting example, and thank you.
Thank you very much, Daria. Omo Balangle, over to you. Access Bank. Access Bank, if you are speaking, we are unable to hear you. You are self-muted. Okay, I see that you have unmuted yourself. Please go ahead. I'll let you know if we can hear you. Okay, Access Bank, it looks like you have, I'll just give you another couple of seconds to see if you're able to come on board. Please let me know. Okay, it looks like our colleagues at Access Bank are having some problems with audio, so I will take over from here. All right. So thank you once again to Daria for presenting on the first example of target setting. I will present on the second illustrative example of what target setting could look like. So here, the bank has identified gender equality as an area that it could have a significant impact on. So it intends to set a target to contribute to the achievement of gender equality, which, as we know, is SDG number 5, and with a particular focus on indicator 5.5.2, which deals with the proportion of women in managerial positions in its country, right? So the bank begins by determining its baseline. So what is my starting point? And it does this by assessing the proportion of its commercial lending portfolio that is attributed to companies with equal gender representation at the board and senior managerial level. So once it has established the starting point, it can then set its target. The target that the bank sets is 50% allocation of its corporate lending to companies with equal gender representation at the board level and in management functions within a certain number of years. So the bank then establishes measures that it's going to take in order to meet this target. And these include identifying which clients to work with, and also developing incentives so that it can encourage existing and prospective clients to work towards gender equality. So it recognizes that, well, in order for me to encourage other organizations to work towards gender equality, I need to be doing the same internally. And so it assesses the proportion of women at the board level and in senior managerial positions within the bank. And it takes it a step further by looking at, well, what's happening with my procurement partners, and how can I also encourage them to work towards gender equality. And obviously the way that the bank does that would be to choose or select its procurement partners based on the level of gender equality within those organizations. So the bank then establishes KPIs to monitor the progress that it's making against its target. And it sets KPIs looking outwards, so KPIs that would have an impact on its clients, and it also then sets KPIs that look inwards. So what is the bank doing internally to try and achieve gender equality? So let's start with the KPIs for outside the organization. The first being an X% increase in loans provided to companies with equal gender representation at the board level and senior management level per year. The second is engagement with X% of identified existing clients to encourage them to develop gender equal policies within X years. Developing gender equality policies would then obviously move these corporates in that direction. The third KPI is to make provision of X% of loans in the corporate portfolio by X year linked to incentives for corporate clients who achieve equal gender representation at board level. So putting incentives in place for clients who achieve gender representation, equal gender representation at the board level. And then within the organization, the bank sets the following KPIs. So policies have been revised to facilitate and ensure gender equality at the board level and within the organization within X years. So we need to revise our policies in order to ensure that we are effectively working towards gender equality. The second being X% increase in the number of training opportunities and bursaries available to women within the bank in X years. So, we provide training opportunities in order to upskill so that, we can move women into these positions, so creating a pipeline. The next is equal representation of women and men in senior managerial positions, including at the board level within X number of years, and to close the gender pay gap within a certain number of years, and then X% of all procurement from companies with gender equal representation at the board level and senior management level within X number of years or by X dates. Lastly, the bank also puts measures in place for mitigating negative impacts that could result from the activities associated with the achievement of its target. And Daria went into, she provided an example around how, sometimes you set a target to walk towards more positive impact, but sometimes there are negative impacts associated with that, and it's really for banks to to be aware of that. So monitor that, make sure that you're aware of if there are any negative impacts, and to then address them. Right, so then that brings us to the end of the examples of target setting. I will now go into our last section, which is on going forward. And here really it's to say that, we encourage signatories to join the various work streams that we have going on at the moment Daria alluded to the work that we're doing on impact, and so we would encourage signatories to join the working group on impact identification, where a tool is being developed for holistic impact analysis. We also encourage more banks. We are currently sitting at, I believe, 34 banks that have joined the collective commitment to climate action, and we encourage more banks to sign up to that collective commitment, and to then work with other banks that have done so to basically develop methodologies further in this area. We will also be proceeding with a gaps and needs analysis, which will inform the development of the Principles Worker Program going forward. And so this is an activity that we will be asking signatory banks to undertake in order to get an understanding of where the most support is needed and to prioritize that. And lastly, if you're not a signatory as yet, we do encourage you to get in touch with us. Let's have a discussion and see how we can bring you on board. And so a very big thank you to all of our presenters, and we now move into Q&A. Good morning and welcome to Simone. And so yes, we would encourage you now to either raise your hand or put a question in the question box that we can then address. Let's have a look to see if we have any hands in the interim. Nothing in the question boxes yet.
Hello.
Yes, I'm hearing somebody coming through. Is somebody trying to speak? I would also encourage any of our panelists, if there's anything that you would like to add at this point while we wait for questions, please do go ahead and do so. Oma Balanli, I know you couldn't come through earlier, but if you are able to now, you can go ahead. I see that we now have a question here from Christopher, and he says, when do you expect to finalize the gap assessment tool? So Christopher, I think that you were on the call with us on Tuesday, where the working group was going through the tool and where it is at the moment. And so, you'd be aware that the tool still is in a process. Oh, sorry, to finalize the gap assessment tool. Okay, so sorry, I thought you were talking about the impact analysis tool, but you're talking about the needs and gaps analysis that we're talking about. Okay, so we are still in the process of refining that template, and we will be sharing it with the signatories within, I think, the next week or two. So that is something that is coming quite soon. I hope that addresses that question, Christopher. Please do let us know. We also have a question from Galam Dali, and the question is, can we find online reporting to get their experience in the implementation of these principles on the website of UNEPI? I assume that the question that you're asking is whether you would be able to find the reporting and self-assessment templates. You see that differently, this question?
My understanding is that Gamal is asking if there are already reports online from banks that have started implementing the principles. Gamal let us know if that's not a correct interpretation of your question. As the principles only have been launched a month ago, there are no reports as of yet. All founding signatories will have to submit or publish their first reporting within 18 months of signing up. So it'll still be a little while, we assume, until the first reporting is available. In the meantime, I think there will be opportunities for peer learning. So even though maybe there isn't public reporting available yet, you can nevertheless learn from other banks. And that will be a core component of the work plan for 2020, and we will determine, based on the gaps and needs assessment that Puleng has introduced, that we will ask banks to do. That will be your way of feeding into the work plan development and also giving a good idea where, in which areas you think peer learning would be especially helpful for your bank.
It's Siobhan here from Westpac. I can confirm that we will have our first report up online on the 4th of November, so quite soon actually. Of course, you know, it's our first step, so it will be our first crack at doing a report against the now completed principles. We did do a mapping exercise against the draft principles last year, but that will be our first go. Oh, sorry, 6th of November.
Okay, thanks for that, Siobhan. So there will already be that report coming soon, and obviously, you know, over time we'll be able to give more developed examples of reporting. All right, so then there's another question here. Daria mentioned that they use a tool to assess impact related to specific sectors in their portfolio. Is that provided by UNEPI? I may have misheard or gotten confused, but would just like to double check. Yes, so Daria mentioned Zina Sedki, that's a question from Zina Sedki. Daria mentioned that there is a tool that is being developed, and this is what I was alluding to a little bit earlier on, for holistic impact analysis. And so that is something that is still in the works. There is a working group that is working to develop this together with the positive impact team here at UNEPI, together with the banking team. And so, you know, if that is something you'd want to get involved in, please do get in touch with us so we can, you know, include you in that working group, so you can see how the tool progresses, and then go into testing. So get involved in the testing of the tool. So Zina, please do get in touch with us. And let me know if, you know, I've adequately answered that question. Daria, I don't know if you want to add anything to that.
Yes, maybe. So there are two different impact working groups. One of them is focusing on the portfolio level impact. So it is to identify, you know, which part of our portfolio are creating the highest negative or, you know, positive impacts. The other impact working group is focusing on transaction level impact assessment. So it is for us to analyze what impacts are each, let's say, corporate client is creating. And, you know, this second impact assessment working group is creating something that will be complementary to the portfolio level impact assessment. So when it comes to the sector to impact mapping work that I mentioned, this is something that feeds both, let's say, tools. So, for instance, in the case of portfolio level impact assessment, you first identify what are the default, you know, or what are the potential negative and positive impacts of each sector. But of course, this doesn't mean that, you know, those clients are actually creating this impact. So there are some further steps to refine the result. But as a first starting point, the tool is making use of a you know, resource that is created by the working group to feed this information. So in general, there are two tools, and there are some sub, let's say, tools or mappings that feed the result in each tools.
Thank you very much for that, Daria. We have a hand up from Tanvir Bashar. So Tanvir, I'm going to unmute you. You are now unmuted. You can ask your question.
Hey, I'm Tanvir. How are you?
Good, Tanvir. We hear you well. We are well, and hope you are too.
Exactly. Nice to know that. Well, I am representing IDLC Finance, and I would like to ask a question in the slide that which has the title "Concrete Actions Banks Need to Take." There you have mentioned that we if assess the frameworks that are relevant in your operating environment and re-evaluate your business strategy. What did you mean by the re-evaluation of our business strategy? Like as a non-financial, as a financial organization, we have operation in SME business, in corporate business, we have operation in consumer business. So, and we are determined to align our business strategy with the customers' needs, society's goals. But how do we want to, how we would like, how would you suggest us to reevaluate our business strategy? That I would like to know about some facts that I can share with my management. That these are the factors. If we this way we are running our business strategy right now, and this is how it should be in near future. So can you shed some light on this? That would be really helpful.
Okay, before we at the Secretariat provide our input into this, are there any banks that want to go ahead and respond to that? Daria, Siobhan, Omobalande, if you, yeah?
Yeah, I can maybe start. So, for instance, in our specific case, like 6 years ago, we had our, bank strategy focusing on issues like customer experience, and then we had another separate sustainability strategy, which was focusing on, for instance, rolling out new sustainable solutions to support our clients' positive impact and so on. And later on, and we also started doing integrated reporting, we decided to combine these two strategies and have one, bank strategy instead of having two separate strategies, because sustainability is also a way of, survival for, in our case. So it is not only the customer experience, it's not only, let's say, digitalization, but also sustainability is also driving our business. So with this in mind, we made we formed a working group within the bank, and then, we combined two strategies and built on the, forward ones and created one integrated bank strategy. And it is online in our website. I can share with maybe Puleng, and they can share with you. And this is, the logic behind aligning the strategy with the Paris Agreement and SDGs is that sustainability is not something that is complementary, but it's at the core of our strategy. And this should be explicitly mentioned in the strategies of banks, and this is where we were coming from.
Okay.
Thanks, Daria. I think well put. Are there any other banks that want to add input into this? Siobhan, anything you want to add, since Westpac has been working very closely with the principals in this reporting cycle?
Look, you're always learning, and you're always constantly looking to refine and, I guess, work through those gaps. But I think Daria explained it well. I think the only thing I would add is just I think the value actually around engaging with peers and how that kind of can help you accelerate as well. And I have to say, through our experience of engaging in the principles and actually learning from peers, actually it has helped us accelerate our progress, particularly around climate change and assessments and methodologies. So, it's not always obvious, actually. The ability to work with peers is really powerful as well.
Thanks, Siobhan. I think what I would want to add to this is that Tanvir, what we mean here is basically say that the bank needs to look at what are the most pressing goals, what are the goals in society, priorities that we need to be focusing on, as informed by the frameworks that are most relevant in our operating environment. So the Paris Agreement, Is it the SDGs? Is it the national development plan for the country or countries that you operate in? To really glean, okay, so what are the priorities that I need to be focusing on? To select what those are, and then to make sure that your business strategy is aligned with those, so that what that means is that it's not running contrary to what those goals are. And thank you to the bank for also providing some, practical examples of what that could look like. Simone, anything that you want to add to that?
Yeah, thanks a lot, Samir. Look, I think a strategy is about where do you grow, how do you grow, how do you better address risk, how do you remain relevant and profitable, etc. And when we say reevaluate your business strategy, it's very much about understanding, okay, where do we grow in accordance or by contributing to the most important goals of our society? Where do we grow that is consistent with challenges? So where maybe should we not grow because it's inconsistent with where society wants to head, for example, in terms of climate change? Where can we do more to, together with our clients, reduce risk, both risk to them and to our portfolio, but also risks and negative impacts to society? So it is really about getting a strategic understanding of risks and opportunities of areas for the bank to grow and areas for the bank maybe to reduce, to avoid risks to your bank, your clients, and negative impacts to society, and having a very thorough and strategic review of your bank's overall strategy with regards to that. So really understanding where's the world heading, how does our strategy fit with that, how do we position ourselves well to benefit from these changes and to not incur unnecessary risks.
Tanvir?
Yes.
Tanvir, are you happy with the responses there? Do you have a follow-up question?
Yes, definitely. I have got the answers. You have shared few inputs which are really valuable to understand the basic things that you would like to convey to us, especially to my specific question. Definitely, I have the thought that you have shared, and I will rethink about it, and definitely will share with my seniors that this is how we can actually realign our goals, which and definitely we are aligning right now. We have been maintaining environmental and social compliance data from 2011, and also we have been assessing every proposal that we are getting from different customers. That we also think we don't just only finance, we also think that if we finance a specific client, does this have any impact on the environment? So definitely, according to the few discussions that I have received, I have to we are aligning, but definitely we have to make it more affirm that we have to realign our strategies with Paris Climate Agreement and also the SDGs that you have discussed. So definitely, it was a very fruitful discussion. I appreciate your thoughts. Yeah, please.
Perfect. Thank you very much, Tanvir. Okay, then we have a question from Selin Yost, I think it's Yost, from Julius Baer, who says, how can we join and participate in the working groups? Selin, just get in touch with us. We will talk on email, but basically just express your interest. We'll add you to our mailing list, and we'll involve you in the calls going forward. And as I said earlier on, in the testing that will follow. So thank you for. Sorry.
এখন have a question আছে মানুষজন আছে হ্যাঁ জি জি মানুষজন আচ্ছা ভাইয়া ঠিক আছে জি জি ওকে জি ও আচ্ছা ভাইয়া জি ঠিক আছে জি
Okay, sorry about that background noise. We have dealt with it now. Casina, so you say thank you so much, and thank you for all your efforts in the presentation. Great, it's great that you found that to be helpful. And thank you from Selin as well. Okay, so let's see if there's any more hands. We've kind of dealt with all of the questions that we have in the chat box, and we've got 10 minutes to go, so if there are any other questions, please do let us know. Okay, I have a hand from Harun. So I am going to unmute you, Harun, from KCB. You should be able to speak, Harun.
Yeah, thank you very much, Puleng and Simone. I have been following closely, and now my question comes around concrete actions that the bank need to take. Well, I know under this we might not have a clear straitjacket kind of a solution that you're giving out to banks, but I'm concerned a bit when we say we assess the frameworks that are relevant in your operating environment, identify societal goals, key goals, and then reevaluate your business strategy. I know you have explained this a bit, but our operating environments, and especially within a region, especially for KCB, which is operating within East Africa, we might have multifaceted kind of issues that various governments might be handling. There might be various issues or goals that cannot be probably closed within various strategy cycles, business strategy cycles. How do we probably convene the senior management to ensure that issues that are of societal interest are coined within business strategy, which is a bit timed, probably 3 to 4 years, whereas those issues are a bit broader than their business strategy. So I think we need to hear and what are these frameworks that we might be of interest that should be evaluated so that as we guide the senior leadership as they think through business strategy, they know the frameworks that they should pay more attention on, yeah, so that they will know they will be achieving on the PRBs. Yeah, thank you.
Do you want to let a first go?
Thanks a lot, Harun, for your questions. I understood two parts, Harun, and correct me there if I'm wrong. The first one was around misalignment of time frames. So time frame of your strategy versus the time frame needed to address key environmental challenges. And the second question I understood was around, okay, which one are the relevant frameworks? Like, how do we pick relevant frameworks? Is that a correct interpretation, or is there more or a different question that you're trying to ask?
Yeah. Simone, you got it.
Okay, fantastic. Well, I'm glad to hear that, Harun. Then let's deal with the first one. Yes. Look, I do think that there is a difference in the time scale. And I think there are two pieces here, right? There is your target setting and there is your strategy. And in some ways, the targets you might be setting for aligning your portfolio with key societal goals might be longer than your strategy horizon is. So let's say, for example, you decide to work on climate change and you set a target for aligning your portfolio with a relevant scenario for Kenya, maybe in your case, within 7 years. That's a lot longer than your strategy. I think what your strategy needs to look at in the meantime is, okay, in those next 2-3 years, maybe for which our strategy is, are we doing things, or are we strategically going in a direction that is inconsistent with these longer term goals? And where do we see opportunities that go in the direction of these longer term goals? So while, of course, you won't in 2-3 years maybe achieve your contribution to those goals, I think you can already evaluate if your strategic outlook is conducive to achieving those. In terms of relevant frameworks, and that's not a very easy one, because there are two aspects, and I think you mentioned that, Haroon. There is, of course, the short-term political environment, and their objectives might change, with different governments coming in and out. And there are longer-term needs. I think in the impact analysis tool, the colleagues call it objective development needs. But more basic background factual issues, like, for example, increasing water scarcity, or being heavily exposed to the impacts of climate change, or high inequality, etc. So I think there's a little bit of understanding what are the background conditions against which the changing political goals play, and what long-term objectives do we see based on that. I think there is some more detailed guidance on that in the impact analysis tool, but there is, and you're right with that, Haroon, there are short-term goals that depend on political cycles, and there are longer-term objectives. And I think it's very much about the longer-term objectives here, because it is about a sustainable future. And so I think, balancing the two is certainly going to be part of your analysis of what we call your operating context. Haroon, I don't know if that all makes sense to you, but answers your questions. If you have follow-up questions, and also I don't know if any of the banks here want to come in.
Yeah, Simone, thank you for the response, and I think it's fairly addressed on the various factors of consideration, and it gives a fair view on how to prioritize issues that should get into strategy and that are more impactful to the society, against even the background of political cycles and environment that might be within various interests to balance on the same. Thank you for the response.
Okay, fantastic. Thanks, Haroon. I don't know, James, Siobhan, or any of the other speakers, do you have a perspective on that, or also maybe an example from your own country? Okay, Daria, Siobhan, I don't hear from you, so that means maybe you have nothing to add. It would be interesting if you have, examples from Australia and Turkey, a bit more concrete than what I said.
Simone, perhaps if you could just quickly paraphrase the question, and I can come back to you.
Sure. It was about, so there were two parts. There was a bit, some external goals have a much longer time scale than our strategies. And then also, how do we choose relevant frameworks? Because there's, of course, more short-term goals that result from a political cycle, and there are longer-term objectives. And so how do we deal with that? And I don't know if there's maybe some examples from Australia, since I think your political cycle has a bit of impact on climate goals.
It sure does. Look, I think what I would say there, certainly from a climate perspective, is you are constantly having to balance your stakeholders and determine which stakeholders. Obviously, you are listening to all your stakeholders, but then you need to determine from their perspectives, as well as what's material to your business, as well as how you're going to best support your customers and clients. And in the case for us around climate change, I guess, the overarching commitment that's most critically important is the Paris Agreement. What that means in terms of significantly less than 2 degrees and net carbon zero, that certainly shapes our thinking. And also, I think elements such as, for example, TCFD, or Task Force on Climate-Related Financial Disclosures, our investors are very clear that they support that. Our regulators are talking about it. So, those, if you like, those frameworks start to kind of hold very true and are critically important. There might be policy that changes. Here we have a 3-year political cycle, so it can change quite quickly. So we kind of have to keep one eye very much firmly on the long-term goals and the pathway by which we're going to get there, and also be mindful that our investors are operating globally. So we do need to take into account and place a heavy emphasis on global initiatives as well. But every bank will need to determine how you best combine and reflect both local and international frameworks. And it's not easy. That said, I look at something like human rights and modern slavery. In Australia, we have a very strong commitment around that. I would suggest that's probably in a faster time frame as compared to what might be happening globally. And of course, we're very much tuned into the national focus around that and really accelerating our focus around that. So it's always a balancing act.
Okay, thanks a lot for those insights, Siobhan. I'm sure they're very helpful and give a bit more practical color.
Okay, Daria, anything from you? We are now over time. Go ahead, Daria.
Yeah, I think Siobhan also made a very extensive explanation on the issue, but just one practical example on the fact that, there may be some mismatch also between the political agenda of our specific countries and some international goals. In this case, our way of dealing such issues is that when we are selecting the areas that we will be focusing on, we are also looking at the existing resources and our existing strengths. So if, for instance, if it is, let's say, a pressing need in the country, the financial, let's say, inclusion issue is a pressing need in the country, there are, several ways to address this pressing need. So one way might be, establishing a microfinance foundation. The other way might be to increase the financial of customers through, let's say, digital channels. And if the regulatory framework in the country do not allow you to, to have a, let's say, microfinance foundation, then you may choose to, build on your existing muscles, which is digitalization, and, try to increase the financial health of your, let's say, customers through digital channels. So it is also, there are, ways to tackle such barriers, and this is, I think the answer is being flexible and building on your existing strengths.
Okay, thank you very much, Daria. So as I've said, we have gone over time now. So I'm just going to canvass a couple of questions / comments that have come in. And one is whether the session will be available on the site. So yes, we have recorded this, and this will be made available. And then the last comment is, what is the impact analysis tool that you mentioned? And this comes from BMP, and I'm very sorry if I pronounce your name incorrectly. I think it's Emin, but yeah. So Emin, I think let's take that one offline. It is a tool, as we said, that will help banks undertake their impact analysis to get an understanding of what their significant impacts are, and that obviously is the step that is required before you then get into target setting. Let us have a discussion over email to see whether BNP wants to join that working group. But I think that we need to now close the session. Simon, I don't know if you have any parting words. No. So thank you to everybody who has participated. Let us know over email if you have any further questions based on what we've discussed in this webinar. And we'll be more than happy to have a discussion with you to respond to those. Two banks that are on the call that are not signatories, again, we encourage you to get in touch with us and let's have a discussion.
And look out for the gaps and needs assessment as soon as it is sent to you. It will be essential that you go through that. One, of course, for your internal thinking and engagement with internal teams, but that will really be how you feed into the development of the work plan for 2020 and can make sure that it reflects and addresses your needs and that you get the support you want and need.
Thank you, Simone. Thank you very much to all of the banks that have presented on this, and thank you for everybody who has participated. And with that, we'll bring the session to a close. Good morning, good afternoon, good evening. Bye.
Thanks, Colleen. Thanks, Simone. Good night.
Bye.
Bye.
Bye.